And it's 1:30 here in Lagos, Nigeria. Welcome to Business Incorporated on Channels Television. I'm Ini John Mekwa. Here's what's coming on the program today. We start in South Africa, where Eskom is being owed 4.7 billion rand by some municipalities in the country. And then Egypt's reserve hit a 16-month high. That's a good backup for the country. In Zambia, there are plans to restructure the debt. You're welcome to the program, and now let's head straight to the market as we would normally do. Starting at here in Nigeria, we see a recovery right there at intraday at the equities, and it's 0.08% in the green, 66,535.88. Recovery from the close of yesterday. South Africa JSE is also in the green, 0.48% at 70,904.44. We move to other regions now, looking at Egypt for one, to see how that's looking. It's very good, almost 1% in the green, and Kenya closed yesterday just marginally positive, 0.04%. We go to Middle East now and see what's going on right there in the Middle East. It's bloody, just like what we had yesterday. Abu Dhabi is 0.39% down, 9,785.97. Dubai is even worse than that, 0.93% in the red. Saudi Arabia is also in the red, 0.68%, as well as Qatar. Qatar is more than 1% in the red, 1.23% at 10,062.41, and that's how it's looking in the Middle East. All right, now let's go to our London studios, where we have Juliana joining us to talk to us about a not so good news. UK's Metro Bank shares has been suspended after it's plunged by 25%. That's a huge plunge. Juliana, good afternoon. What was at the bottom of this?
Good afternoon, Innie. Yeah, this is a major story in the City of London today for obvious reasons. I think investors are starting to have nightmares about what happened 7 months ago when we were all talking about the collapse of Silicon Valley Bank. Of course, the UK subsidiary was bought by a pound by HSBC. Now, Metro Bank have tried to reassure investors today. They have said, look, we have been profitable for the past 3 quarters, so no reason for alarm. But there is, of course, reason for alarm, because it was just revealed earlier this morning that Metro Bank was seeking £600 million to shore up its balance sheet. We're yet to know exactly why they need this money, but according to economists, this is to finance its debt. And Metro Bank haven't been out of the news. They have had issues, most notably in the past couple of years, because of accounting. I do believe that there was some black holes that they managed to resolve, but nevertheless, because we are in a completely different global economic environment, there are concerns. The Bank of England are watching this case play out very carefully, and I've just heard, just before I popped into the studio, that the CEO has been summoned by UK regulators. Now, a lot of people may not know of Metro Bank. It is a new bank founded in 2010 by an American entrepreneur, very popular with lots of people that do small businesses in the UK because it's just easy to use. Though they do have several banks across the region, you can use it quite simply and freely on your phone. They have more than 2.3 million customers. They employ over 4,000 people. So yes, their shares dropped 27% this morning. This is on top of the fact that shares have dropped by more than 50% in the past few weeks. But according to them, no reason for alarm. Bank of England watching this very, very carefully. And just to reiterate the point as to the reason why it's such a big story in London and I presume across the pond when Wall Street wakes up, is because it has reminiscence of what happened with Silicon Valley Bank, which of course, was felt all across the globe, Innie.
Yeah, and still there, we hear the Prime Minister talking a lot about defense of banning smoking to the younger ones. Well, generally, smoking is known to be harmful to the health, but I wonder why this is making such a big headlines.
Yeah, it's a big story because, of course, anybody who knows, smoking is an incredibly dangerous habit, not just dangerous, but damaging. And in fact, it contributes, I think, probably most to a lot of the reasons why people die so young. In fact, I think there is one scientific data that proves that if you are a long-term smoker, it's more than likely going to kill you. So I think it's probably best to put that out there at first. But this is Britain, and one thing that Brits do not like is being told what to do, which is why it took us so long to lock down during COVID. Britons do not like being told how to do things. They call it the nanny state. So even though Rishi Sunak, the Prime Minister's statement yesterday, was for good intentions, there are already mumblings going on within the Conservative Party about going against this. And now, for just some context for our viewers, this statement was announced yesterday during the Prime Minister's keynote speech at the Conservative Party conference, which has just wrapped up in Manchester. He announced several key pledges for the long-term good of the country. And apart from some of the major ones, which is scrapping HS2, investing in education and the NHS and other areas, he also spoke about young people, and he doesn't want them to grow up smoking. So he said what he is going to do is he is going to be phasing out the legal age that you can buy cigarettes in this country, whereby by about 2040, so just in about under 20 years' time, nobody will be able to legally buy cigarettes. Now, this is huge, and Britain would be the first country in the world to do so. There are similar schemes currently under legislation in New Zealand, but they are yet to take off. Now, as to be expected, there has been a huge reaction from the multi-billion-dollar tobacco industry. In fact, as soon as that statement was made yesterday, during his speech in Manchester, shares of some of the biggest brands, including Imperial, fell quite swiftly. And they said that, this discussion needs to be taking place with regulators as well as the tobacco industry if he is indeed going to be successful with going for full prohibition. But we're yet to see. As I said, this is going to be open for a free vote in the House of Commons within the next couple of weeks. Already we're hearing that his predecessor, Liz Truss, is leading the rebellion to vote against it. But considering that smoking is an incredibly damaging habit, the fact that he is planning on phasing it out so nobody will ever buy cigarettes can only be a win-win.
Yeah, well, I can only imagine when smoking becomes an illegal action. Well, that would be a good thing on one side for health, as you've mentioned, but I mean, people's rights and all of that. But let's see how the markets are looking at this time.
Tip-top shape at intraday. The FTSE All Share is up by 0.54%. The FTSE 100 up by 0.39%. And the FTSE 250, the domestic market, up by nearly 1% at 0.91%. In the currencies market, the British pound is currently trading down against the US dollar. It's down by 0.05%. Also down against the euro by 0.11%. And down against the Japanese yen by 0.10%. In
All right, Juliana, thank you so much for that update. Well, move over to Berlin now, where German exports fell again in August, and that's because of the global economic slowdown. We have a correspondent, DW correspondent, Chiponda Chimbelu, now joins us for the details. So, Chip, give us the numbers. What's the latest?
Thanks for having me, Innie. Well, the latest figures show that both Germany's imports and exports are declining. So let's start with where the biggest fall was. Imports in August fell 16.8%, on the year, and they were down 0.4% on the month. Now, this fall may also have to do with a decline in industrial production that we've been seeing. And it is quite clear that the monthly decline was narrower. So perhaps the analysts who've been saying that we may be approaching a bottom when it comes to industrial activity decline may actually be right. Now, if we turn to the exports in August, they were down 5.8% on the year and 1.2% on the month. Outside of the European Union, it was the United States that was the biggest buyer of German goods in August. But even there was slightly lower demand than last year. And China was the biggest source of German imports. But there too, the demand for Chinese goods here in Germany was also down. And that, of course, too, would be linked to the overall decline in Germany's industrial activity that we've been seeing in recent months.
And Germany has been called the sick man of Europe. Does it look like this is true at this time?
Well, when it comes to what the country's economy ministry has been saying, it's been saying that the economic situation is divided. So they've been saying that we are seeing, a pickup in domestic economic activity, and that is, of course, a result of a rise in real wages and a positive investment trend. Meanwhile, foreign demand has deteriorated amid a global economic slowdown, and that is, of course, what is really hurting the German economy, which is, of course, export-driven. Now, Germany will feel more pain as a result from the global economic downturn than the rest of Europe. And the European Commission's latest growth forecast has been reflecting that. If we look at it, the 27 EU economies are expected to grow at an average of 0.8% this year. And the bloc's biggest economy, Germany, is expected to shrink 0.4%. What we see in Germany is that it's still reeling from the fallout of Russia's invasion of Ukraine in February last year. And the search for alternatives to Russian gas exports in particular has led to an energy crisis that is, of course, still weighing on industry. And all of that, of course, is also compounded by other challenges, which, of course, include insufficient digitalization, bureaucracy, and a lack of skilled workers. Meanwhile, the current global economic environment is turning more protectionist. The EU has become, of course, wary of trade partners like China. And all of that is going to have a major impact on Germany's economy. The fact that EU authorities are investigating Chinese subsidies for electric vehicles and wind turbine makers could potentially affect trade with China. And that, in the long run, will influence, of course, trade with China, which is which is the world's second largest economy and one of Germany's biggest trade partners.
A whole lot of complications there, Chip. Thank you so much. You're welcome back. We head to a commodity space, and gold is in focus this time around. And do you know the price of gold has gone down more than 8% to nearly 6-month low, now stands at about $1,842.60 for an ounce. Subsequently, the US dollars, of course, we know they're both related, adverse or inverse relationship. The US dollar rally has been relentless against major currencies. We saw that relationship between both of them. Well, let's have Halima Adediro joins us now, analyst with Financial Derivatives Company, joins us virtually from Victoria Island to have more conversation on this. Good to have you on the show for the second time this week, Halima.
Thank you for having me. So for gold, we'll see that just like other commodities, it doesn't have a bullish performance in the global market. Why? Because the interplay of demand and supply tends to determine or dictate the price at every point in time. And so that is why we saw that the price rose to an all-time of $2,075 per ounce when we had the COVID shutdown in 2020. That was around August. And now we are seeing that it's on a low of about $1,000 per ounce. And some of the things that caused that is, one, because of the high interest rate environment. So now we have inflationary pressure, and most of the central banks across the globe are really staying hawkish in order to taper and curb inflationary pressure. And because of this, investors are shifting their sentiment towards the investing in stocks or assets that will give them high interest yield. And as a result of this, we are seeing them selling off their gold holdings in order to buy into those assets. So that is number one. Another thing is because for now we have the dollar appreciating against major currencies, and because dollar is actually one of the strongest currency in the world. It is easily convertible, so it is majorly used for international trade. So because of this, and dollar too is also an asset, we're having like a kind of shift to dollar. But at times they have positive relationship. They can crash together as well or rally together. But what we are seeing now is an inverse relationship. So when we have the other aspects whereby they crash together or rally together, investors that wants to invest in the two assets, that is dollar and gold, they have to look at the trend of the market very well to know which and how to trade in both assets. And aside that, we still have the situation of so many expectation as regards the performance of the economy and the global economy at large in 2024 and 2025. And so that is signaling a positive performance. So it is causing a kind of expectation that gold in the global markets will do well when it comes to the next quarter or 2 quarters to this time. So we are seeing that. So we are seeing that currently.
All right, so the EIU is projecting an increase in prices from the first or second quarter of next year. What would now be driving that increase in prices?
So as I earlier said, that whenever we have a high interest rate environment, it affects the price of gold. But now that most of the central banks are are having a hawkish pause kind of, and that means that by their next meeting is likely they either tend to reduce their hawkish stance or increase further by just one hawkish stance again. So that means that we are expecting an expansionary monetary policy next year. And it means that the shift to high interest rate environment that is making investors to invest in gold will finally be reduced. And so we'll have a shift to gold investment. And aside that, China is like it accounts for 1/3 of gold exporting in the world. So in 2024 to 2025, we'll see that people will shift to dollar investment because the what is it called? The market is not doing well in terms of assets and housing. So people are shifting from buying the assets and housing. So we feel that the alternative asset that people would want to invest in is gold. And
Halima.
not only that,
all right,
we are expecting that the global market too will increase in terms of performance and economic boom.
Okay, all right, Halima. Thank you so much, Halima. We'll look forward to that projection. Perhaps some of us will head to gold, to invest. Thank you, Halima Adediran, analyst, financial derivatives company.
Thank you.
All right, now moving to the other stories. The World Bank has ranked Nigerian naira among the worst performing currencies on the African continent. According to the Global Bank, the naira weakened by nearly 40% against the US dollar since it was devalued in June. It made this known in a report titled Africa's Pulse, an analysis of issues shaping Africa's economic future. It stated so far the year that Nigeria and Angola Kwanza are among the worst performing currencies in the region, and they posted a year-to-date depreciation of nearly 40% each. Still in Nigeria now, Manufacturers Association of Nigeria Export Promotion Group is concerned about the seeming slow pace of implementation of the Africa Free Trade Area Agreement in the country. Members of the group and other stakeholders decided to meet and discuss hurdles and possible solutions to accelerate the program. The meeting was held in Lagos, southwest Nigeria. We go to Egypt now. Net international reserves at the Central Bank of Egypt has reached $34.97 billion in September. That's the highest level in 16 months, and that's according to data released by the Central Bank. Egypt's foreign reserve increased by $42 million in September compared to the month before, and by more than $1.7 billion over its figure in the same period last month. Zambia's official creditor committee plans to sign a memorandum of understanding to restructure $6.3 billion in debt by the close of International Monetary Fund's annual meeting next week. The nation has made slow progress on talks with creditors since June, when the government reached a deal in principle with the group co-led by China and France. The agreement cutting interest rates to as low as 1% and only repaying the loans in 2043. In South Africa, two of the country's biggest municipalities, all the state-owned power utility, combined as Eskom, a combined 4.7 billion rands, that's about $244 million. The city of Tswasni, which includes the capital Pretoria, owes 3.2 billion rand, which accumulated July and August due to erratic payments. Eskom Holdings SOC Limited said in a statement that the industrial hub of Ekurhuleni, which includes the country's biggest airport east of Johannesburg, is 1.5 billion rand in debts. And we go to oil exploration. Right now, we see that a consortium comprising of Qatar's Qatar Energy, the UK's BP, and Italy's ENI has been awarded a new exploration block off Egypt as part of 2022 e-gas international bid round. According to Qatar state-owned energy giant, Egypt's Ministry of Petroleum and Mineral Resources announced the results of the competitive bid process, awarding exploration and production rights for the block EGY-MED-E8, located offshore Egypt's northeastern Mediterranean coast. The ESPOR said that the block lies in water depth of up to 800 meters and covers an area of approximately 2,600 square kilometers. That's it on Business Incorporated today. Thank you so much for being a part of it. Another episode comes your way tomorrow. I'm Ini John Mekwa. Enjoy the rest of your day.